Have you ever wondered what would happen if you discovered the most powerful money secret years after you needed it? This is the story of learning compound interest too late. You are 18 years old. You get your first paycheck. It's not much, but it feels like freedom. You buy new clothes. You upgrade your phone. You spend money on things that make you happy in the moment. Investing? That sounds like something rich people do. So you ignore it. Years pass. You turn 22, then 25, then 30. Every month, money comes in. Every month, money goes out. You promise yourself you'll start investing someday. But someday never arrives. Life gets busy. Bills get bigger. Responsibilities multiply. And investing stays at the bottom of your list. One afternoon, at age 35, you're scrolling online. You see a post about compound interest. The post claims that someone who invested early could become wealthy without earning a huge salary. You laugh. It sounds too simple. But curiosity wins. You start reading. And then you see the numbers. A person who invested $200 every month starting at age 18 could end up with hundreds of thousands of dollars, maybe even over $1 million, depending on returns. Your eyes widen. You grab a calculator. You start doing the math. The more numbers you enter, the worse it gets. Because every calculation shows the same thing. Time mattered more than money. Not a little, a lot. You realize that the money wasn't the secret. The years were. Compound interest isn't just growth. It's growth on growth. And then growth on that growth. And then growth on that growth too. At 18, $1 has decades to multiply. At 35, it still grows, but it has less time to work. You stare at the screen, thinking about all the years you spent waiting for the perfect time, waiting until you earned more money, waiting until life became easier. But the perfect time never came. And now, those lost years can't be recovered. For a few days, you feel frustrated. You replay old decisions in your head. What if you had started earlier? What if you invested just a little each month? What if you understood this years ago? The questions keep coming. But eventually, you notice something important. The people who started at 18 are ahead. But the people who never start are even further behind. And suddenly, your focus changes. Instead of looking backward, you look forward. You open an investment account. You make your first contribution. It's smaller than you'd like, but it's a start. The next month, you invest again, and again, and again. The balance grows slowly, painfully slowly. At first, it feels like nothing is happening. But this time, you understand the process. You know wealth isn't built overnight. You know compound interest rewards patience. So you keep going. Months become years. Years become decades. Your portfolio keeps growing. Not because you found a magic trick. Not because you got lucky. Because you stayed consistent. Because you finally gave compound interest time to do its job. And one day, while reviewing your investments, you realize something surprising. You didn't start as early as you wanted, but you started earlier than many people ever will. And that decision changed everything. The biggest lesson wasn't about money. It was about time. Most people think investing is about finding the perfect stock, the perfect strategy, the perfect opportunity. But the real secret is simpler. The earlier you start, the easier the journey becomes. And if you feel like you're already late, remember this. The best time to start was years ago. The second best time is today. Because every day you wait, compound interest waits too.